Cable just snapped its one-month trendline. UK services PMI imploded. US safe haven flows are surging into the dollar. 1.3300 is the trap. I've got 2 scalp plays and 1 swing setup that trigger today. The danger zone. A fake breakdown that hunts stops. The opportunity? A 130 pip freefall. Full breakdown with exact entries is live. Tap the link in the description right now before the London close. This level breaks, and the monthly trend flips. There is 1 danger zone and 1 hidden opportunity right now. I'll show you both. Cable is not just dropping. It is carving a textbook trap that will wreck late shorts and late longs in the same session. Right now, price sits at 1.3316, but the whole market is staring at 1.3300. And here is what almost nobody sees. The biggest option expiry in sterling this week is sitting right above us, acting like a giant magnet, but if we break below the big figure, the structure doesn't just crack, it freefalls. Stay to the end. I am giving you 2 scalp plays and 1 swing trade you can execute today, plus the 1 headline after the ECB that flips everything. On your screen right now you see it, 1.3300 trap, 2 scalps plus 1 swing. That is your blueprint for the next 12 hours. Instant market verdict, 0.25 to 110, session bias. We are fading any intraday bounce that does not reclaim the pivot zone. The trend on the hourly, the 4-hour, the daily, strong sell across all time frames. ADX is pushing 27, CCI deep in the minus 120s. And Williams %R is pinned at minus 93. This is not a pullback. This is trend continuation with momentum. The line in the sand that flips the entire bias is 1.3375. Write this number down. If we get a decisive 4-hour closeback above 1.3375, the bearish structure resets and we are immediately shifting to range-bound, possibly a squeeze back toward 1.3400. Until then, every rally is a shorting opportunity. And here is the herd trap. Retail positioning data shows a massive buildup of long positions from traders trying to pick a bottom above 1.3300. That means there is a cluster of stop-loss orders sitting right beneath the round number. A perfect liquidity pool for a stop hunt. And just this morning, Citibank's FX desk flagged an enormous 1.3350 vanilla option expiry rolling off today's New York cut. With price now trading firmly below that strike, dealers are hedging by selling spot, accelerating the downside. That expiry wall is the gravitational pull right now. Technical deep dive. 110 to 430. Let's walk the chart from the weekly all the way down to the 60-minute, because the alignment is unusually clean. On the weekly time frame, the long upper wicks from the prior month's high near 1.3600 have resolved into a strong bearish engulfing pattern. The 20-week moving average is rolling over, and the MACD histogram is printing lower highs. This is not a dip to buy, this is a structural shift. Drop to the daily. Price has sliced through the 1-month bullish trendline with conviction, and it is now trading below every major daily moving average I track. The MA20 is at 1.3382, the MA50 at 1.3376, the MA100 at 1.3392, and the MA200 at 1.3378. Notice that cluster between 1.3375 and 1.3395. That zone is now heavy resistance. As long as we stay below that band, the daily chart is in a clear breakdown mode. The daily MACD has just crossed bearish, and the RSI at 44 is not yet oversold, which means there is plenty of room to fall before we hit any exhaustion signal. The ATR is 82 pips, so expect aggressive ranges. A 1-day extension from the current spot projects easily to 1.3234. Now zoom into the 4-hour. We have a series of lower highs and lower lows, with the most recent lower high right at 1.3402, which is also the R2 resistance pivot. The 4-hour candle that broke below 1.3359, which is S1, closed with a massive bearish engulfing body, and the volume spike on that candle was the highest in 4 days. That tells you institutions were selling into any strength. On the 60-minute chart, price is currently compressing just above 1.3310, forming a small bear flag. The measured move of that flag targets exactly 1.3245, which coincides with the next major structural support below 1.3300. And here is what most traders miss. The stochastic on the 60-minute is curling up, giving a false sense of a bottom. But with the ADX above 25 and the DI- line dominating, that is a classic momentum trap. The bounce will be sold viciously. Cross-asset linkage confirms the narrative. The dollar index has spiked through its own MA200 and is holding above 105.50. US 10-year yields a bit as safe haven flows pour in, and even Bitcoin is falling in lockstep with equities. This is not just a cable story. It is a broad risk-off, dollar-smile environment. Gold, however, is getting bid on geopolitical fear, and that fear is also boosting the dollar, not sterling. The pound is being treated as a risk proxy, and right now risk is being punished. Fundamental driver and cross-linkage, 4:30 to 6 o'clock, the news wires are blinking red for sterling. Overnight, UK flash services PMI came in at 48.7, a sharp contraction and well below the 50.5 forecast. On the other side, the US composite PMI smashed expectations, printing 54.5. That is the widest growth divergence between the two economies in 6 months, and the currency pair is repricing that gap violently. At the same time, UK average earnings cooled to 4.3%, and June CPI slowed faster than anticipated. The market has now fully priced a Bank of England cut by September, and some desks are whispering about an emergency move if data continues to crater. That takes away the last yield support pillar sterling had. Meanwhile, the Middle East powder keg has exploded. The Strait of Hormuz is effectively blocked by escalating US-Iran military friction, sending crude oil prices spiking. That energy shock is stagflationary for the UK, crushing the consumer, but it is dollar positive because of the petrodollar recycling and safe haven demand. Reuters reported just 2 hours ago that fund flows into USD-denominated money market vehicles hit a 2-month high, confirming the flight to safety. For the 1 to 2 week outlook, I am leaning heavily bearish on cable as long as we remain below 1.3375. The path of least resistance is a grind toward 1.3218, and if geopolitical headlines intensify, 1.3000 comes back into view. The exact event that would invalidate this medium-term bearish view is a combination. A surprise hawkish hold from the BOE and a de-escalation in the Gulf. Until you see both, the dollar killers are asleep, and the pound is trapped in the fear architect's cage. Here is your second interaction trigger. Do you think cable breaks 1.3300 this week and closes below it? Comment yes or no. I'm tracking the consensus in real-time. Trade setups, 6 to 10 o'clock. Most people skip this section. That is exactly where the money is made. Keep watching. I have 3 specific strategies, each with an exact trigger, stop, and target. They are designed to work in this environment of strong bearish momentum with an oversold bounce risk. The first is the opening scalp. This is a high-probability short snipe off a dead cat bounce into intraday resistance. The entry zone is 1.3340 to 1.3350. Wait for price to rally into that band and print a clear rejection, preferably a 5-minute bearish engulfing candle or a shooting star with a long upper wick. The trigger is the close of that 5-minute candle below 1.3345. Once triggered, place your stop loss at 1.3365, just above the high of the rejection wick and above the option expiry magnet. Your first take profit is the immediate liquidity pool at 1.3300. That is a 30 to 40 pip scalp with a risk-reward better than 1 to 1.5. If momentum is extreme and we slice 1.3300 on the 15-minute close, you can trail your stop and let a runner target 1.3260 as a secondary exit. But the primary scalp target is the psychological floor. This setup is void if the 5-minute candle closes back above 1.3355 with volume. That would signal a possible squeeze toward the pivot and we stand aside. The opening scalp, the opening SCALP entry, 1.3345, 5M bearish engulfing rejection from 1.3340 1.3350, stop loss, 1.3365 take profit 1, 1.3300 take profit 2, Run a 1.3260 risk reward, 1 minute and 2 seconds, to TP1, invalidation. Void if 5M candle closes above 1.3355 with expanding volume. The second is the liquidity grab. This is a counter-noise scalp designed to exploit the inevitable stop hunt below 1.3300. Here is the psychology. The market knows retail stops are stacked at 1.3290 to 1.3280. So we wait for a sudden, violent spike below 1.3300 that sweeps those stops and then instantly reverses. The trigger is a 15-minute bullish engulfing candle that closes back above 1.3305 after having wickered below 1.3290. Entry is on the break of that engulfing candle's high, ideally around 1.3310. Place your stop loss strictly at 1.3280, just beneath the sweep low. The target is a fast mean reversion move to the 1.3345 area, right where the earlier short entry Saturday. This scalp must be executed with lightning speed. It often happens in a single 15-minute candle. Do not hold this position if we fail to reclaim 1.3315 within 2 candles. It means the breakdown is genuine and you must flip back to the bearish swing. This trade works only if the initial sweep is sharp and the recovery aggressive. If price merely trickles below 1.3300 without a forceful bounce, skip it. You are hunting the whale stop run, and you need confirmation for liquidity grab entry, 1.3310, after 15 minutes bullish engulfing reclaim above 1.3305, with a low below 1.3290, stop loss, 1.3280 take profit 1. 1.3345 risk reward, 1:1.75 invalidation. Void if 15M candle closes back below 1.3300 after entry. Now, before I give you the swing trade, this is your interaction cliff. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. The numbers tell me a lot about sentiment. The third strategy is the session swing. This is the bearish trend continuation trade aligned with the 4-hour and daily bias. The trigger is a clean 1-hour or 4-hour candle close below the 1.3300 psychological level. Not a wick, not a tap, a body close. Once that prints, enter short on a small retest of 1.3300 from below, treating it now as resistance. Your stop loss goes at 1.3355, placed above the prior consolidation breakdown node, which also sits safely above the daily pivot and the MA200 cluster. The conservative swing target is 1.3245, which is the measured move of the bear flag and the next major support. The stretch target is 1.3218, which aligns with the March monthly low and a key historical order block. As soon as price reaches halfway to the first target, around 1.3272, move your stop to break even and then trail it by 40 pips. This trade invalidates if we get a daily close back above 1.3402. That level would indicate a false breakdown and a potential trend reversal, snapping the bearish structure completely. This is the trade you hold through the session, through potential whipsaw, because its risk reward exceeds 1 to 3. It is built on the trend, not on hope. The session swing, the session SNG entry, 1.3295, after 1 hour close below 1.3300, entry on retest of broken level, stop loss, 1.3355 take profit 1, 1.3245 take profit 2, 1.3218 risk reward, 1:3.2 invalidation. Void if daily close above 1.3402. Before I give you tomorrow's wildcard, let me be absolutely clear. Never risk more than 1 to 2% of your account on any single trade. Scalps demand even tighter risk because slippage during a new spike will eat you alive. Absolutely no positions through the ECB statement or any high-impact dollar event. Stops are non-negotiable. This is how you survive to trade the next big move. So here is the single most critical level to carry into the next session. 1.3300. It is the pivot of fear and opportunity. If we close below it today, the monthly trend structure flips fully bearish, and the 1.3000 handle re-enters the conversation. If we hold it and bounce back above 1.3375, then this entire sell-off was a giant stop hunt and the bearish bias is suspended. Tomorrow, the ECB decision lands, and with it the euro-dollar axis that often drags cable along for the ride. I will have an updated blueprint for you exactly 24 hours from now, mapping every fresh support and resistance level after the volatility settles. If you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis, and then loop back to today's Nasdaq Gamma flip later. Hold the like button and subscribe. Every signal you send tells the algorithm to bring you the levels that matter before the move explodes. Scalp the noise. Swing the trend. That is your closing thought. I will see you right here tomorrow, before the next trap is sprung.